Okay, guys, welcome to the part 2 of our market structure video series here. So the last video we were talking about the three kind of ways market behaves. It means, how market moves and the way you see the market every time on charts, and an uptrend and a sideways market and in a downtrend. So today we'll just be going much further to understanding market structure proper. So basically we know that this move right here is a typical textbook version of how the market moves, but it's not always like this. It's not always seen like this, and that's what I was trying to explain on the previous video so that you guys will understand. Now the typical market moves, right, by creating moves like this to the upside, retracing back to the downside, make another impulsive move to the upside, retrace down, makes another impulsive move to the down upside. Okay, forming a series of what? Higher highs and higher lows, right? Higher highs and higher lows. Now, how do we want to catch moves in an uptrend? Right? How do we want to trade in the trend? Trade along with the trend. Okay, we want to catch a trade, right? In an uptrend, right? We want to catch a trade when the market is trying to retrace, right, into the zones where market made an impulsive move, right? This low to this high, right, is a swing movement. Market decide to buy from this low, made an impulsive move to this side, right? So if we want to trade along with the trend, we would want to wait for market to retrace back down, then we enter to continue with the trend. When market retraces back down, we enter to continue with the trend. That is how to trade the trend, right? Now, but this move, there's a lot of things going on in a swing, between a swing low to swing high, swing low to swing high. We need to understand the structure, right? But we know that market does not move this way. It moves something like this. From the previous video, if market makes a swing low to a swing high in an uptrend, market creates another swing low to swing high, market tends to come back down, takes out this previous low to continue up. When it makes another retracement to the downside, that's when we want to enter for a move, right? Something like this. This is what smart money concepts entries on a continuation is. Same thing with a downtrend move, right? Typical way market moves in the downtrend. Okay, the market moves in the downtrend, makes a swing, a lower high to lower low, another lower high to lower low, lower high to lower low. Smart money wants to enter after a previous lower high has been swept, create a new lower low, then we enter the retracement for a continuation move, right? This is actually the way the markets move. But the question is, how do we catch this move in the market? How do we catch this move in the market? There are several things you should look out for if you want to catch the move. For example, in an uptrend, when you have a swing, okay, let me see, when you have market moving like this from this swing high to this swing low, then market makes another swing high, right? Now this is the point. You want to catch a move from a particular swing low to a particular swing high. How do you now know where to enter from, right? How do you know where to enter from if the market is kind of retracing back down, right, to regions where market might tend to want to buy for a continuation? Okay, because this is simply how the market moves. As long as you are moving along with the trend, market will make impulsive moves to the upside. The market will retrace to the down, retrace back into the zone, right, for a continuation. Now, how do we catch this continuation move? There are several factors that's involved. We want to catch a move probably after a low, a protected low has been created. Now, what is a protected low in SMC? A protected low is a low that has swept a previous low For example, market was moving in this direction in an uptrend, creating this previous low, then make the new high. Now it came back down to sweep this low, disrespected this particular low, and created a break of structure to the upside. Now for SMC, this particular low is protected. It's a protected region for us, right? Now we would want, as long as we have identified a particular protected low and market is still trading in the particular bullish trend, we would mark this particular region, this particular low, as a point of interest, and this particular swing will be important to us. It means if market starts coming down, retracing down, it means this particular swing movement, this low that has swept the previous low and this high, will now be very, very important to us. So how do we now catch a trade when market is moving from this swing high and is coming down into regions where we want to catch for a continuation? Okay, because now we know that market has made this move. Market wants to pull back down to continue to the upside, just following market structure. So there are several ways we want to do that. Now there's what we called premium and discount, right? Premium and discount. It means market makers, smart monies, they want to buy low, they want to buy cheap, and they want to sell high, right? You want to buy at a cheap price and you want to sell at a higher price. Okay, and that's where an important tool called the Fibonacci retracement tool comes in. It's a mathematical tool that helps us maybe calculate regions where price might be interested in, right? Premium zones. So it's actually very simple. Now when we see a protected low, that means a previous low that has swept liquidity, and we now see let me make this structure bigger. Let me draw this thing clear. Of course I'll take you to the chart, definitely, but I just want to make this structure quite big so you understand what I mean. Okay, we have market moving this direction, right? Created a swing high, a swing low, another swing high. Then all of a sudden market comes and disrespect the previous swing low and created a new high. Now once we see this, we are quite interested, right? In where are we interested in? We know that market is still bullish, and market is going to tend to retrace from this swing high to regions here for a continuation move. Okay, so now this swing low becomes a point where we're interested in, and this swing high becomes also a point of interest for us. What I mean is, we are now waiting for price to come into a zone here for a continuation, but we don't know where price wants to come to. Okay, this is just basic market structure. So let me use an horizontal line for this so it will be very clear. Take this forward. Okay, now price has made a swing high and we have a swing low. Now remember, this is a bullish structure. Market has been creating highs and higher lows. Then all of a sudden market comes to sweep this previous low and now creates a new break of structure to the upside. It means market wants to continue moving up, right? So now we know that price is likely to start retracing, right, making slower moves to the downside, but we do not know where we would now take our entry from this swing, right? But our point of our range now of trading is from this swing low to the swing high. Now this is where premium and discount region comes in, right? We want to buy with the market makers because they want to buy cheap. So if they are to continue this move to the upside, to create another break of structure, they would want to buy at a discount level, right? Because price has pumped from a low to a high. Now if price is coming down, they want to buy again for a continuation, for a discount level. That's where the Fibonacci tool comes from, right? So on your Fibonacci, this is the Fibonacci tool. Once you draw the Fibonacci, so all you need to do is to draw the swing high. You take the first point of your Fibonacci on the swing high to the swing low, right? Now, of course, I customize my Fibonacci the way I like, based on backtesting and the way I trade. Okay, but your Fibonacci can have 0% and 200%. That is the swing high. Then the 50% region, because on Fibonacci we have premium. The premium is from either the 0 to 50% level, or the 50, depending on how you want to put it. For the way I draw it now, since it's an uptrend, from my 0 to 50 is my premium, from my 50 to 100 is my discount. Okay, so we're just calculating the 50% level. So if I'm to draw my line on the 50% region right now, horizontal line, so it means the 50% part of this swing from 50 downwards discount. It means since I'm interested in buying, right, the 50% level of this swing, below 50% is regions where I will be interested in buying, and above this 50% level is the premium zone. So since we know that, we have now used our Fibonacci to divide our swing. Where do we want to take buy? As long as market is in this region, no matter what we see, we do not want to say we don't want to catch a long from here to continue upward. Why? Because market is still at a premium level based on our current swing. Whatever market is doing, what other market has done in the previous does not concern us. Since the market is bullish, we are concerned with this move because we know the market wants to continue. But now we need to do a calculation for this swing. If market is to continue movement, market needs to come anywhere in this 50% region before market continues moving upward. So once you do that, you draw your Fibonacci to 0, 50, 100, right? A full percentage now is 100%. When you divide 100 into 2, you get 50. So this 50 is the discount line, the equilibrium, right? From here to here, premium zones. Let me type it. From this region now, you have the premium, right? P. This region below is now your discount, D. Okay, so if I take out the Fibonacci tool, it means market has made swing low, swing high. Market needs to retrace to a discount region before I even consider to take in a buy, right? Before I want to consider to take in a buy, because now we have a protected low, of course a point of interest. Market has swung to the upside, created that swing, started falling down, retracing. We cannot say we want to take a buy until, no matter what we see on this swing, we do not want to do that. We want to wait for market to pull up into a discount level for we to now go on buys for a continuation to the upside. Beautiful setup, beautiful trade. Once we see that, we want to take trade. So whatever market does in between these ranges, it's might be a trap for you to enter the market. Maybe you want to try and go long. Market will induce you, create that inducement, and want to take you out. But what I do personally, again, in order for me to get lower discount regions that price might retrace into, I look at this break of structure. Remember, when market is moving in an uptrend, market creates what? Series of high highs and higher lows, and also a break of structure. What's a break of structure? Break of structure occurs in an uptrend where market, right, moves from a low region to a high region, disregarding the previous high. Market moves from low to high, low to high. This movement from this low to creating another high disregarded the previous high, right, creating a new higher high. Okay, so now as long as a break of structure has been created, market made a new low, new high, another break of structure right here has been created. Okay, now this is just based on structure. You can hear me, since I've not talked about liquidity, I just want you to understand structure. Okay, now markets created a break of structure. So now I've gotten a swing high, a swing low. I have use my Fibonacci to get the 50% level, so I know that these zones here is now what, from this line is 50%. This region is my discount. this upper region is my premium. So I don't want to take any buys from here. Rather, if I see a sell setup on this region, I want to take sales from this zone into my discount. But that's actually risky. For professionals, you want to follow the trend. So as long as the market is bullish on structure, you do not want to start selling. You want to be patient enough to wait for market to move into discount levels. But there's also something I do to be able to help myself to create new discount levels, more discount level that price might come into. Okay, I can take my Fibonacci from this break of structure, right? I can put my 0% here and put my low here, so that I have a new 50% level. Then I will drag my 50% level line into this place, right? Now I have discounted. Now I'll take it from the break, from where the break of structure occurs. I'll put my Fibonacci, I'll drag it to the low, right? Then, you know, my previous 50% was here, but now I'll have a new 50% based on this previous. I use this range, this previous high and low, to give me more good discount level. What it means is now I have also created a new discount opportunity. So where do I want to buy from? I would only be taking buys when market retrace into this level, and market will now create that continuation move to the upside. That's what I want to buy. So I'll take any buy setup from this region, then I will long, put my stop loss below the protected low, then I want to take my profits at the previous high. This is how market actually moves in a market structure format. And I will actually take you to the chart. The same thing goes for the sell setup, right? If market is selling, right? For example, if the market is selling, okay, let me just, before I go to the sell setup, let me show you a typical example of this, right? I think I made a trade on XRP recently, and okay, let's go to XRP. You can see the XRP market is bullish, and it's creating that series of higher highs and higher lows, right? So there was a particular trade I caught here when I was looking at these structures, right? Now market creating several series of highs and low, swing high and low, swing high and low, then we got a swing high here. Okay, then we got another what, swing low, that's high here, that's a low, then we got another break of structure to the upside. Then all of a sudden I saw market coming down to suspect this low for a continuation move, right? This is where I caught the trade. Now let me clean this to show you guys what happened right here. Now if you look at this structure, quite bullish. Okay, now market made a swing from the swing low point, right? Created internal structure, because once we have broken structure from the upside here, market retraced from the low. This low pushed up, could not break, pushed down, pushed up. So this move is an internal move. The swing is from here to here. Okay, that's the swing. Now market created a new high, came back down to create a low right here. This is the swing from here to here. Internal structures available. Now you can see in the, when market created a high, low, high internal structure, market even created this particular low, did a sweep, right? So that is a point to note. We saw a sweep because this structure moved up, market came back down and took out this low before continuing. So this is kind of moves we want to see, this kind of swing move we want to see. So now our point of interest will be this swing. Market has created a move from this low to this high. So what do we want to do? We want to mark this high. Then we saw market retracing down, right? We know we are bullish for a continuation. We mark, I use this to mark my swing low, just like the example I gave you guys right there, and this for my swing high right here. So our point of interest is this, just this move. When market did a sweep here, and created this move, then start coming down. So what's the first thing I told you based on structure, right? Now if market's coming down, you want to buy, but you do not know where you want to actually buy from, right? Let's say you don't know where you want to actually buy from, then the market is coming down. The first thing to do is use your Fibonacci retracement tools, right? When you put the swing from the swing high to the swing low, you will get a 50% region, right? 50% discount region. It means from this low to this high, the half of it is 50%. So anything below 50% is where you'll be looking for your buys. Now if you put 50% right here, you draw your line, okay? Now you've gotten 50%. It means market is coming down here. Anything above this region you don't want to buy for a continuation. You want to wait for market before you catch a buy. Now like I said, I also use this to, from this low, now this was the previous low, of course this is a break of structure right here. These are protected low that have swept liquidity, that swept the previous low, made a move to the upside, right? Then it broke structure right here. You can see that break of structure. So like I said, I can also bring my Fibonacci here and drag it to the low so that I get a new discounted 50% level. So now I have a 50% level from this swing low to this, right? I have a new 50% level right here. So I can decide to bring my 50% discount level to this zone. It means I will be interested in taking a buy only when market falls into this level. Now I have a good zone which is from this to this, because it was here previously, but now I bought it from using my Fibonacci from the previous swing high and swing low. I got a new discounted region which is from here to here. So anything happening above this region for me now will be noise, right? So I'll be looking to catch my buys here, and you can see this, it actually corresponds with the levels of the order block, because we have a push to this upside. Of course I've not treated order block for you guys. Order block is just the last candle before an impulsive move, right? If it's a bullish move, we look at the last red or green candle, just the last candle. The color doesn't really matter. The last candle before a bullish move. For an uptrend, for a downtrend, the last candle before a bearish move. So you can see this is also a good region of an order block. But let's say we don't know anything about order block, we just look at this market structure. So Fibonacci, the tool said as market has made that impulsive move, coming back down, we can take our entry. You can see what happened. Market came to this region but did not tap into the entry at the first place, pushed back up, right? Then all of a sudden market start coming back down into our level of discount. So it means this is just an inducement, right? Market coming to these zones, it could not pick our entry, it induced buyers. Then all of a sudden market starts selling because it wants to come and buy at a proper discount, right? At a proper discount level before going up. You can see the beautiful pump. So this is a wonderful trade from this region right here. You can see even if you take your entry, let's say you take your entry directly from the 50% level you've called, then you put your stop loss just below the protected low and you take your profit at the previous high. You get a good trade. You can see a beautiful trade right here. Market just came back, tapped into it and started moving all the way up, okay? But when I took this trade, I took it at this order block right here. So as long as my entry is inside within this 50% discount level, I'm good. So I took my entry from here right here and I targeted the previous high. I got a beautiful trade right here. You can even target higher regions, but of course there are other things to look out to target higher regions which we're not covering in this class. We just want to understand how market moves. Okay, so simple typical thing is just this here. So what just happened? All this move was just this. Market was moving in an uptrend. All of a sudden the market took out a low, break, came back down and continue movement, repeating the same thing. That's how the market moves in an uptrend, typical way. So you can actually backtest this, and using that Fibonacci tool is actually very very good, very nice. Okay, so I don't want to make this video too long, so this is just part of it. So if we go back to BTC, so That's for the bullish scenario, right? It also happens in the bearish scenario. Okay, where we have this kind of move. So this is the textbook version of a downtrend, but this is what we kind of see when market wants to move down. Market will create what in a downtrend, right? High highs and high lows. When we see another high low, then we see market takes out this, makes that impulsive move. Now this swing high to this swing low becomes our point of interest. What we want to do is we will mark out the highs, the lows, and we'll mark out the swing high. Right? At this point now we'll use our Fibonacci retracement tool to mark out. Let's get our premium. So now for sales, we are selling at a premium. We want to sell high, right? Since the structure is bearish, right? Our 50% level will be here. Of the Fibonacci will be here. So it means all the zones from this 50 to 100 is what my premium zone. While this place below is my discount. So I don't want to start selling at a cheap price. I want to sell at an expensive price since the market is selling. So I will not take any sell that is not above my 50% level. So if market starts retracing like this, no matter what, as long as it's not above 50, I'm not going to enter the trade. Even if it comes down like this, I'm not going to enter that particular trade, okay, till it gets into the 50% region above this my premium. Any area inside this premium, I'll now be ready to take sales for a continuation to trade along with the trend. Now there's also the same thing. I also do something like that. I can also pick the previous swing, because now when market did this, there was a break of structure after market has taken our previous low, now becoming protected, right? So now I can decide to take, in order to get more premium level, I can decide to do my Fibonacci again like this, right? So that I have a 50% here. So now I have more premium, a tighter premium level. It means no matter what market is doing around these levels, even though market start moving like this, I don't really care. I'm not taking a sell till market comes into any area of interest in this zone. Then I can now take a sell to the downside. Okay, I think there was a particular trade on BTC. Okay, it happens. You just need to start going to your chart to back test. You will see the structures happening over and over and over and over again. Okay, where is it? There was a particular. Okay, let's look at this structure right here. This move. Now, of course, market was in a bullish trend here. Then all of a sudden, market start reversing, start coming down, and this was a high, a swing high, a swing low, a swing high, a swing low, right? Then market made a swing high, but came down and invalidated this low, right? Changing structure completely, market looking to come lower. So there was no sign that market wants to, right, go bullish, right? So if you look at this, market shifted structure right here, and look at how the structure shifts. This particular low was the one that drastically shifted structure to the downside, creating that trend. So what we're looking at, we're looking at this move, this kind of move, when markets creates this, right, sweeps, right? We want to see something like this to catch the move to the downside. Okay, now look at what happened. Market creating that internal structure, high, low, high, low, high, break to the downside. This particular low has swept a previous, this particular high has swept a previous high here, internal high. So there was a sweep. Then all of a sudden market pulls down to this level. So we have a swing from here to here. That will be our interest. So if I draw a low here, an horizontal low, and of course this swing also broke a bullish structure here, showing us that we are no longer respecting this swing low to this swing high. There was a shift here. After this, we're going to talk about market structure shift so you guys understand that. Okay, now, but this is just based on how market moves. Now we have a swing low, which is this. We have a swing high, which is this. So if I draw my horizontal line to that swing high, I get it as here. Okay, there. This is swing high, this is swing low. So what am I looking at? I'm looking to catch sells. Okay, I'm looking for sells. So like I said, since we have a low here and we have a high here, if I bring out my Fibonacci from the swing low to the swing high, I'll mark out my 50% region where I want to look for sells, which is this. So if I draw my horizontal line at the 50% region right here, 50, draw line. Okay, let's take that out. It means my high, my low. If market start retracing, I'll be looking for sells anywhere around this region for a continuation to the downside. But now I still have a way to mitigate this region. Now remember, we have a low high break. So there was a break of structure right here. So I can decide to use my Fibonacci from this break of structure, which was to this high, to get a new 50% level where I would want to be interested in. So you can see here I have a new 50% level. So instead of using this one, I can now shift my 50% all the way to this side here. So now I have a new premium good levels. So between here and here. So anything market does, let me even make this properly. You need to do it very well. Fibonacci, right, from this to this 50% level. Beautiful. So anything market does that is not here, I do not want to take any sell position. And you see this also corresponds to the 1 hour time frame order block. So I think I took this trade with the 1 hour time frame order block right here. So even if you decide to take the trade from this 50% line, you will still make profit as long as you're putting your stop loss above this. So you can see this is a beautiful trade to the downside right here. Put your stop loss just above that your protected high, then you target the previous low. You can see even if I target this previous low, of course this is my previous swing low, you can see it's a beautiful 1:4 trade. So if I'm risking maybe $100 on this trade, I'm going to make $400 just by this beautiful move. $1,000 on this trade, I'm going to make $4,000, right? Beautiful move. If I can decide to target other regions, right, then you can see the way BTC sold down drastically to the downside with this same move, same techniques. You can see it happening over and over again. Okay, also caught with this same market structure move. You can go and back test it. It happens. There was one I caught on XAUSD on higher time frames, smaller time frames. It happens. I think one was recently. One happened recently here when the market was moving in a kind of bullish way here. I think I caught the trade right here. Okay, this is it. Now this is a bullish scenario. Two, the same thing. You saw market moving all the way with this move. Then all of a sudden we saw a break. Market taking out lots of liquidity around this region here. Then all of a sudden market decides to make an impulsive move to the upside, creating a break of structure. We have a protected low and now a break of structure, right? We are now interested in this trade, in this particular swing, right? We're now interested in this particular swing from this place to this place. We want to now mark those regions, right? Mark a low, and I'm marking here as high. As I mean, all this move has not happened. So this is just our point of interest. This, right? This high and this low. Okay, what do I now do? I check because market is now retracing. So I want to know good regions to buy. I use my Fibonacci 50% level. It's here. Draw that line. Okay. I hope this video is not too long. for this is just the part 2. So of course, you know, we have to take this thing step by step, because the major thing is not about creating short videos that I don't want to skip anything. So if you can just stay tuned and watch the video to the end, you catch one or two things. So the major thing is to give out value no matter how long it takes, because I'm taking time to teach you guys. Okay, so now we have a 50% region. So it means even if the market retraces to here and say start buying, we are not interested, because this is the discount we want to buy from, not premium. Okay, so I can now further decide to use my Fibonacci again from this level where the break of structure happens to this low. So I have a new 50% level here, so I can decide to bring my discount level to here. So 50% right here. Okay, 50% level right here. So if you guys remember the typical move market makes: a sweep, a break, a pullback, continuation. I think that's exactly what just happened right on this particular XAUAD, XA gold pair XAUD USD. Why is the XAUUSD? What's that? Funny. Okay, this is just a typical market move. Exactly what just happened right here. Look at this. Look at this low. Look at this sweep here. Look at this previous movement to the upside here. Then market created that break and came back down to just typical movement. Exactly this is just happening, that just happened here. Okay, so let's go back to the analysis. So now we now have 50% level, 50% level right here. So you can see the market came all the way back into this 50% level, did a buy all the way. So even if you are taking a buy position right here, I didn't take mine here, I took mine at the order block. That's why I'll teach you guys about order block. But even if you took a buy right here and put a stop loss below the protected low, right, and take profit above this swing high, you made a beautiful trade. That's a beautiful 1:2.4 trade. Okay, but the market still came down because it wants to. So this first move acted as an inducement. Market wants to come to lower zone, so it came to actually the 15 minutes order block right here to take the buy. And now when it took the buy, it actually went up to the high for TP. So it would have been a beautiful trade from this zone to the upside again. Now market still came back down because now this low has swept liquidity of this previous low that has broken structure and now is protected. So when market is coming back down into this region, of course it wants to buy up. That's just this structural move you see here. This low is this one. This sweep occurred here. Of course this one also swept. That's why this respected it and pull up. So you can see it's a beautiful trade, and all the way market start moving all the way to the upside, right? Even on higher time frames, same thing. Of course, same thing happened. A lot of move happened here on gold. You can see gold was creating beautiful uptrends from here, right? From this zone, there was a break to the downside. The market pull up. Of course, the structure is bullish. You can see the trend. So we had a low that created a high that created a low. Then all of a sudden, the market pull up to create a new high and a break of structure. So our point of interest is this low. Let's clear this. I think that will be the final example before we call it today for this class. Getting too long. Okay, so market created a swing low to a swing high and the structure was broken. So if I had this to be my point, okay, the high is here because market, when it created the low, it moved up to create a high before coming back to retrace. So the swing high is here. So the region is from what? Let me draw the horizontal line. The swing high is from here. There's the swing high, and this is also the swing low. So if we want to take, we have impulsive move. The market start retracing. We want to buy when the market is retracing, but we do not know where to buy. We know that market has created a low to a high and broke structure. Right now market is retracing. We know that market wants to continue moving bullish since the trend is bullish. we want to now catch it. How do we do that? Use your Fibonacci tool to mark out the 50% region again. You got your 50% region to be here. You draw that line, okay, mapping out the line 50%. Now if you drag your Fibonacci to the previous break of structure, where the previous break of structure has, it will give you a new 50% level. You do that 50% level. Now you look at this structure. Beautiful. It means you do not want to take any buys as long as market is within this area. You want to take buys from here, this level, all the way here. Now if you look at this structure, of course this is the 4 hours. If you go to the 1 hour time frame, now you see market made an impulsive up, down, and another up movement to the to the upside. So in a 1 hour 4 hour time frame, it's also a bullish move. So there's an order block here. So if I decide to pick this 4 hours order block right here, which is the last candle before the bullish move to the upside, you see that buying, as long as I'm buying within, now my discount zone is from this line to this line. So anything market does when coming, as long as I see a move to buy, I'll be comfortably buying here. And look at this order block, beautiful, because the impulsive move moved from here, pulled back down, then made an impulsive move right here. So from this low. So imagine if you catch, I think I caught this trade. Yeah, I caught the trade. You caught the trade from here, buys, your stop loss just below the order block, then your targets all the way up. It's a beautiful 1:4, because when I caught it was 1:4 actually made on the trade. Okay, so you can see it, immediately market came down into that discount region. You had a full TP, even when way higher, before market continued to do. As long as you've caught your move, what other thing market does after that is none of your business. Okay, so this is typical 1 or 2 ways to understand market structure. Okay, to understand market structure really. So I think in our next video, which is going to be the part 3, I'm going to be talking about trend lines. Right now, following market structure, a lot of people, when the market is bullish, right, maybe, okay, for example, let me just do that. That's the last move. The market is creating series of high highs like this, high lows going up, right? If you notice, the market is actually following a trend line while it goes up, actually following that trend line. We have series of top, and that's what helping the market to push. But most times, most people do not know that sometimes market will come and break that trend line, right? And you wouldn't know that market has shifted structure to the downside. So people start taking buys. Well, markets just want to make a retest of the trend line to start coming down. So we'll be discussing this move on the next class. So thank you guys for watching.